I want to welcome you to another edition of Wednesday Night Live. We've got a great group here, and I can see a number of people are still coming in the room. So while they get set up, I just want to give you a little tour of the webinar software. You can always text chats into the chat area. So if you can locate that on your webinar software, I'd love for you to just say yes or okay for the audio and the visual to let me know that you can see the audio. You can hear the audio and you can see the picture. So great. Okay, Steve, hi, how are you? Paul Cooper, Sharon, John, Ted, great to see you all. Super. Okay, loud and clear. Great. Well, I just want to let you know that we enjoy having these Wednesday night webinars because we like to bring you a new educator each week to educate you on different ideas and trading. And of course, tonight we have Bennett McDowell, which most of you know. Bennett here, I'm going to read his bio. He was a financial advisor and securities broker and founder, of course, of TradersCoach.com. He developed a niche in active trading and investing for a community of high net worth clients using his own proprietary trading system. This successful approach later became known as applied reality trading, or the ART system, and Ben brought the ART software to the public in the year 2003, and today it's used in over 55 countries around the world by sophisticated hedge fund managers and individual investors alike. Considered an expert in technical analysis, McDowell speaks at many trade shows, including the Traders Expo, and he writes articles for leading publications such as Technical Analysis of Stocks and Commodities magazine. He's honored to be included as a member of the e-Signal Trading with the Masters team, and also to present the TradeStation Morning Market Briefing every Wednesday morning. In addition, TradersCoach.com has received numerous Stocks and Commodities magazine Reader's Choice Awards, and McDowell has written 3 best-selling books published by John Wiley & Sons, The Art of Trading, A Trader's Money Management System, and Survival Guide for Traders. His new book, Elliott Wave Techniques Simplified, will be released by McGraw-Hill in 2014. So without further ado, I'd like to introduce to you all Bennett McDowell, and Ben, take it away.
Gene, thanks so much. Folks, it's great to be here. I want to welcome each and every one of you to today's webinar. Okay, so you should be able to hear me okay, so I'm going to assume you can, so we're all set to go here. Today's topic is going to be how to use the top 10 picks, and we're referring to the, of course, weekly top 10 trading picks for consistent profits. So we wanted to have a webinar tonight that specifically talked about how to use this service and also how to interpret the lists and so forth. So we're going to cover some new material here that we really haven't covered in a webinar before on the weekly top 10 trading picks. Of course, we have to begin every webinar with a disclaimer, and this one's no different. There is risk in trading. We all know that. Without that risk, of course, there's no opportunity. All right, our results so far for the year using this service is 426.47%. We're going to talk about how we calculate our returns as well. And we go all the way back. We started the service in October of 2012, and we had a great year in 2013, and so far we're off to a good start for this year too. But I also want to cover how we do the calculations and also show you some other fun stuff regarding the results as well. So today's objectives are going to be focused on basically showing you how to use the trading picks lists. We're going to show you the pending lists. We're going to show you the open trading list, the canceled trading list, and the closed trading list. So we're going to focus on how we present the trading picks to you. And of course, if you have any questions, feel free to ask the questions, and I'll get to them eventually in the questions window. I already see we got a question up here from Myron. Hi, Myron. We are recording the session, and the recording will be available tomorrow in the archive area at the traderscoach.com website. Okay, so it will be available. So if you have to run, you can check it out there. In addition to covering what the lists look like and so forth, we're going to show you actual trade recommendations. So this is kind of a little bonus. You're actually going to be privy to some of the actual real lists that we have currently in the Trading Picks service. And we're going to take a look at those on some of the charts as well. So that'll be kind of fun. And you may pick up a trade or two that you want to use. All right, we're going to show you how you can implement the system with real money, yet maintain risk control. One of the big questions we get is, we have a lot of picks. We have 10 picks each week that are new picks for the week. But, sometimes during the week, not all the previous week's trading picks were triggered. But they still may be good trades. So we don't want to necessarily get rid of those. We want to keep those. So we put them on the pending list for the previous, we call it the previous pending list. And the previous pending list, and I'll show you that as a summation of all the trading picks that we still like but haven't been triggered yet. So the result is you can have a number. If you join the service today, you're not just going to see 10 trading picks. You're going to see all the previous ones that weren't triggered. So you're going to have a lot of opportunity. In addition, you're going to see the open trading list. Now these are trades that are actively open. And there's times when we have over 60 or it's about 60 trades sometimes open. So the question is that a lot of people ask is, hey, how do I use this, if I have a limited trading account? So we're going to talk about that and show you because that's a great question. All right, I want to talk a little bit first before we actually take a look at the actual picks. What do we do? How do we do it? What formulas do we use and so forth? Well, we use a whole bunch of formulas in different ways. We look at finding the best trades. And we use technical analysis. Those of you that know me know the kind of technical analysis I use. I have proprietary software that gives me an edge. In addition, I know how to use other forms of technical analysis, of course, like Fibonacci, extensions and retracements, Elliott wave, and a whole host of things to arrive at price target zones. I also look at emerging markets, and I scan for markets using the ART scanner for those markets that I feel are ripe to take off. So we have a pretty structured way in which we take a look at the markets and derive at the best picks. Then once we find the markets, then we ask our question, the next question, logical question, is, hey, when do you get in those markets? And so we locate key entries, exits, and profit zones, all based on the ART trading software, and of course, things like all the other technical analysis we use as well. And we always use risk control, okay? That's very important. You got to use risk control in running any type of trading program. And we're going to show you a way that you can effectively use risk control no matter what size of trading account you have, okay? Here's just a couple of examples. I mean, the list has grown so much that I haven't added the new stocks on there yet. But you see, a lot of these, a handful, okay, every quarter really hit home runs. And you only need a handful, okay, every quarter to do really well. Now, I'm not saying the rest are losers. I'm just saying you may not win 181% like you did on some of these, okay? But you're going to win. But these really huge wins, all right, will come, but you got to be in them. So we're going to show you again the different trades and what we do. This is just an example of one where we got in on a breakout and got up and took a quick profit in a very short period of time. So basically, we got in on the February 8th and got out at March 12th. This is what we want to do for 133.33% profit. This is what we want to do ideally on every trade. We're not long-term investors in this service. We're trying to catch momentum trends. We're trying to get in and get out as quick as possible when the trend ends. All right, let's take a look so we can actually see what we're going to take a look at in terms of when you order the service. So I'm going to bring down here, the first thing I want to bring here is a copy of what the login area looks like for the trading picks. So just take a minute. This is on a service called CustomerHub.net. Now, Customer Hub is a service that we use that houses the subscription for us. So when you sign up, you will automatically get an email from Customer Hub with a login link, a username, and password. Now, once you log in, you can change your password. All right, you can change your credit card because don't forget this is an ongoing monthly subscription. So you'll automatically get billed every month until you cancel. And so if your credit card changes, you can update it in this area. And also you can access all the picks. So once you sign up, nothing is emailed to you except that logon link and username and password. And it is emailed to you immediately after your purchase goes through, your subscription purchase. So if you don't get it within an hour or two, let us know, okay, because you should have gotten it by then. But also please check your spam or junk email folders because sometimes, things can end up in there. So definitely be careful about that. So this is kind of like the landing page. Here is, for example, everything that's associated with the trading picks. I've highlighted it here. And so you got the trading picks main area. Then you got the main menu. All right, we're not on there yet. Then you got the pending trades. We're not there yet. Open, active trades, canceled trades, and closed trades. So this is the first area you're going to access. And this is kind of like a general welcome area, okay? And notice here, okay, that we have a Trading Picks instruction manual and a little brief video. And then to actually access the picks, you can go right here to where it says click here, Trading Picks. We also have some historical performance, and we'll come back to that as well. And then if you do decide to cancel, I can't see why you would, of course, but if you do, you unsubscribe right here by clicking on this button, and that will take you to a form that will automatically unsubscribe you. So let's go ahead and get into the menu area. So there's two ways to get into the menu. Clicking here, or you can go to the top and go to the main menu. Okay, either one will take you there. So if we go here, the next sheet that will come up, all right, will be this, which is called the Trading Picks main menu. And from here, you can access basically all the forms you need to initiate this service. And notice here we have pending trades and the current week's picks. We have open trades and updated trade information, closed trades with results, canceled or subscribed trades, and historical annual and quarterly returns. All right, and again, we give you the instructions just in case you need those again. All right. Now, we also at the bottom list some of the software that we use in running this service. So if any of this interests you or you want to actually load the software on your charting platform and use that along with it, you certainly can do that, okay? There is a fee for that, of course, but we just put it there so you can learn more about it. All right, let's go into the pending trade. So every Sunday, basically by 3 p.m. Eastern Time, we update the picks. The picks are not updated every day, only once a week, and that's all we need to do. We do not micromanage these positions. These positions, we like to let them go and not micromanage them, and updating them each and every week is plenty enough in order for you to do well with this system. So let's take a look at the pending trades and current week's picks. So if you click on here, it will take you to another page called Pending Trades. And notice here, all right, we give you in the top part a brief run-up on the market news and statistics. So basically, every Sunday, I go in and I take a look at what's out there on the wire, so to speak, and I put anything in that area that is pertinent to what's going to happen, I think, in the upcoming week. Under that, we take a look at the global situation, and then I come up with my own technical analysis based on looking at the Dow Jones and the S&P and see what I think is going to happen technically. And I put that in the write-up there. Then you jump down here, and I've got this what I call Dow Jones Industrial Average Equities Market Strength Meter. And so based on everything we look at, we still feel that we have an uptrend in place. So overall, we're bullish. But currently, we're experiencing a correction in the bullish market. So we've had a run up and a pullback. So we've got two things going on here. And so overall, we think trades to the long side pose a fairly low risk based on this assessment. All right. However, we may take some short trades too. We will favor the long trades mostly. But if a particular stock is favorable to the short side, we may consider it, or we may not. We may wait until the market rolls over. But we also have a flatter corrective market, okay? And so when we have this type of scenario where you have a check in the trend in place and a check in the flatter corrective market, then we're more apt to maybe take a look at some short positions or maybe some hedge positions. Maybe we'll use an ETF, a short ETF, to hedge some of the markets. And then that way, if the market falters more, we can stabilize the return of the portfolio, okay? All right, now somebody says they're losing audio. Is my audio okay? Let me just make sure audio is not going down here. It's okay, good, okay, it's good, okay, great, thank you. All right, so somebody text to Stanley that probably best thing for him to do, since he was having audio problems, is to log out and then log back in, okay? Okay, let me continue. All right, so that's the purpose behind the Dow Jones Industrial Average Equities Meter. And if you're cherry picking the picks, meaning if you're not taking them all, but you're deciding on which ones to take, then this meter could help you determine whether you're in a period of more risk to the upside or more risk to the downside, okay? All right, let's go to the actual pending lists. These are it, okay? So in front of you, all right, we have this title here which says this week's new momentum picks. Let me get my pen here and just show you what we're talking about. So here we have this week's new momentum picks, and these are real picks, okay? So what we have is, we tell you on the left-hand side, I just want to go over these, what the trade type is. This is a stock, all right, or an ETF. Now the service, what we do is we give you 8 stocks and 2 ETFs each week. So the ETFs we put down here in their own little category, and the stocks are all up here. So then we have a trade pick number that we associate with it, because we deal with so many of these things in a year. We could have 300 or 400 picks, so it's a great way to find them quickly if we need to. All right. And then we take a look at the coverage date. The coverage date basically is the date that we initiate the pick on. So it'll always be on a Sunday, okay? And the most recent one was 3/16. We give you a little description here. We try to keep the list as simple as possible so they're as easy as possible to use. Then we give you the symbol, all right? We give you whether it's a buy or a sell. We're leaning to the buy side this week. Ideal entry price. Wait for this price to be reached. Now, when we talk about this field here, most of these prices, okay, will either be very one tick over the close, one tick over the high of a price bar we're looking at as a key level of resistance, and so forth. If the entry price is one tick over the close of Friday, okay, don't forget these are updated Sunday, so if it's just one tick over the close, and then this is basically the same as saying it's an immediate buy. And so we expect you to go into this market if it reaches this price at any time after Sunday, okay? And then if it does, your immediate stop loss is set in this column here, right here, okay? Price target zone is calculated here, usually using Fibonacci extensions. And then the status is just letting you know these are pending trades waiting to be entered, okay? So now, this is for this week. Notice at the bottom, okay, we have another category called previous picks, not filled but still pending down here. So these are basically picks that have carried over from the previous week, okay, into our list because they're still good trades, they just haven't gotten hit yet. And sometimes our ideal entry price, which is this price here, you know, could be at times a point or a point and a half or even 2 points away from where current prices are. The reason we do that sometimes is because while we don't want to miss an entry, we don't want to get in now because the market may not have quite turned around yet. So we're not 100% sure that the correction that it may be in is over yet, but if it reaches this price in this column, then the correction is over and we want to be in it. Now, if it doesn't get hit for this week and it's still correcting when we look at it next week, then we may even lower the price to get a better entry, okay, if we think that's a good idea. So the idea behind the price in this column is it will give you the entry of whether to go long and short depending on the trade. All right, let me just see if there's any questions. One from Steve Miller, are these swing trades? Well, the term swing trade can be a, basically a label, so to speak, on many different types. There's different types of swings in the market. We try to trade, Steve, in the correction of the dominant trend. So, for example, if we have a swing that's coming down, let's say we have a bullish market, we have a swing that's in a correction, a swing down, we probably aren't going to want to get into that trade, okay? We're just probably not going to want to do it. But, all right, if the swing trade is up to the upside going in the direction of the trend, then yes, we want to get you in there. Now, if we happen to get you in on a very steep wave in the market, like a wave 3 if you were looking at Elliott wave, then we know after wave 3 we're going to have a pretty serious wave 4 correction. So we might take you out at the end of wave 3. So in that case, Steve, it would be taking a swing trade on wave 3, so to speak. All right, so hopefully that kind of clears it up, okay? Why did the initial stop seem to be so large, 10 or 20% in some cases? Great question, Kent. Sometimes, I'm going to show you on chart, what we like to do for our stops is we use key levels of support in the market. Sometimes we put them below a wave 4, and if you have a wave 4 that's completed and you're trying to catch a wave 5, the final push up on a trend, then what you want to do is you want to have your stop at the bottom of wave 4 if wave 2 has not occurred yet, because wave 2 can retrace 100% from wave 1. So in some cases, it could retrace as much where the point difference is 10 or 20%. Now, what does that mean? Okay, does that mean your risk is 20%? Heavens no. All right, lower your trade size so that your risk is a comfortable percentage, like 2%. I'm even going to show you a way in which you can use real dollars in a real account to right away make it so your percent risk is very controlled. So we'll get to that in just a minute, but Kent, that's a great question. All right, Greg, if a trade triggers, you are in to target, or do you close before target is reached? Well, the idea is, Greg, is we usually like to trail our stops up. Sometimes if we're at a target zone and we feel there's more room to go up, we may, and I'll show you this shortly, we may put in a situation where we have a scale out. In other words, we want you to sell half of your position. Let's go to the open trades and let me show you some of those, because I think that's a good thing to do. Some of the other questions seem to be centered about what to do on that, so I think that would be a good thing to do. So let's go back here. Now you can access the open trades either from here, or you can close this out and go back to the open trades. All right. Now, this is the open trades, and on the top here, I repeat the summary here because you may want to look at this or at least realize what I'm thinking here when you're looking at the open active trades. Notice here, these are the newly open active trades at the top. And what that means here, okay, is that in this situation here, these are the trades that have been opened, okay, since the last update, since the last Sunday. And so these are all the recently opened trades. So here we have JCPenney, for example, and we have a whole bunch of them that opened. Atrium, all right, Glowpoint Inc. And so these are, on these columns here, again, you'll see the trade type repeated, the trade pick number repeated, the start coverage, okay. Notice these are all from March 2nd, whereas the pending trades were all, basically the new pending trades were March 16th. So these triggered, okay, from the list the previous week. We have the description of the equity or the ETF, symbol, actual trade, entry and price, okay, is here, ideal price, entry, boom, 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 boom. Okay, initial stop loss, target zone, actual trade entry here, okay. So obviously here, okay, if we have 30.58 as the ideal price, then this was initiated back here on 3/2, and it was filled on the 13th, okay, the week after. And then the fill price is right here. And then we have our current stop loss. Now sometimes, like on this one, we update the stop. You know, use a trailing stop. We may have moved it up if it moved in our favor, or if we got a key level of support that allowed us to move it up. Here, for example, on Glow, okay, this was a real inexpensive one. We don't usually do them this inexpensive because of the liquidity issues you can have. But this one started to show decent liquidity, and it started to move abruptly. And I got to tell you, so many of these mid and smaller cap stocks have been moving so well that we've been kind of watching the rotation out of some of the big boys that have run up, of course, a lot sooner and a lot earlier, okay, than these mid and small cap stocks. And are rolling now, the money seems to be rolling into these where there's more opportunity. So that's why you'll see some of our picks vary from price to price depending on what the market's doing, okay? And so on a case like this, you know, we'll put an update here, sell if prices rise to 250, because that's a heck of a great return, okay, right away, and you know, it's in our price target range. So in that case, some of these very small caps, sometimes they spike up and then sell off immediately. So we don't mind doing that, okay? We don't always do that, but on some cases we do, depending on the type of market. All right, if we come down to the previous open trades, and I want to show you, this is just for this year, how many we have open. A lot. Look at that, okay? So that's a lot of trades open. And if we take a look at them, I'm going to show you how to handle that. So basically here, notice that we have a column on the far right-hand side filled, the number of open trading days, profit taking or sell recommendations in addition to the actual hard stop that's right here. So let's scroll down, and here's some examples of some of the conditional sell half position if we drop to 6.54. So this is profitable, but looks like we may have a pullback. So we'll go ahead and lock in half our position here. Here was our entry, okay, and then the rest of our stop is here. All right, we've been in that for 19 days, okay. So we do give you little recommendations, whether it's a scale out or not. And then under here, for example, on Galt, let me just bring up, show you this one, on this one here, okay. Notice that our hard stop is at 11.74 still. We got in at 13.99, but we had a situation to sell half a position, which we did on 3.5, okay, at 16.19. So we locked in some profits there, but the trade looks like it's still good, so we still want to stay in it. We don't want to get out of the entire trade yet. So that's how we let you know by basically giving you some extra information in this column here when to scale out, and we'll tell you if we think you should get out altogether or just scale out. All right? So that's kind of a little bit of an insight on the open positions. You know, basically they're all the way down quite some of them we've been in a long time, and some we're still in and we don't know how long we're going to be in. All right, let me just see if there's any other questions I missed. Kent, thank you. Okay, Ted, do you recommend scaling out at the first price target by some percentage? Sometimes I can leave that up to you. You know, these are suggestions that we do. We always like you to trade in your comfort level. So if you're in the price target zone, chances are you got a decent profit. All right, so I'm not really worried about you scaling out there. If we don't tell you to do that, it's because of a reason, and that is we think there's a lot more upside potential, okay? Are there short picks? Yes, there are. We do have some short picks, and for example, General Motors, we're short, and VeriSign, we're short right now. Let's see if we've been, of course, in a bull run for the most part, but here's Philip Morris. We got a sell on here. This is a short trade. When the market finally rolls over, the shorts will be the dominant, okay? For right now, they're not as dominant. We've got a few there, okay? And we've got probably a few more down here. Clorox, sell, okay? We've got one on Verizon, okay? And General Motors, like I knew. And the rest are pretty much buys, okay? So we do some shorts and we do some longs, but predominantly we think the market's still got some more room to the upside. Now, Kent's asking a good question. Or let me get to Arturo first. Can you do options with these trades? Yes, okay. In fact, we got a number of people doing options right now. And how you want to do options on this is to coin a phrase, if you want to call these like swing trades, our average length that we're in a winning trade, and let's take a look at that, because that'll help determine the kind of option you want to do. Let's just go down and take a look at closed trades, okay, with some results. And for 2014, let's just go to this page here. Now, on this page here, all right, we've done 80 closed trades so far this year, okay? We had 47 wins, 59% winners, 41% losers. We've got an average winning percent of 18.49. 49 days is the longest, the average held. So you want to have your option, okay, not too close. If our average wins are 49, that means we have some over and some under, okay? So you want to make sure your option expiration, okay, is long enough that you don't have to roll the option over. We do have some open trades. It's unusual, but we do have some open trades over 80 days. That's unusual, okay, but it happens. All right, that's more the exception than the rule. So I would say 3 months, 4 months, 6 months is the most, okay? I wouldn't go beyond 6 months, all right? So that's kind of what we're looking at, all right? Notice that the trades that are losers are held 19, so we get out of those losers as soon as we possibly can. Just some more interesting information here. And I'll give you a link right now to this performance in the chat area. I just put that up. You can go back and review it. But, you know, we fully disclose all our trades. None of this is hidden from the public, okay, and none of it's hidden. Not one trade is hidden. All the good and the bad are out there, and it's actually pretty good, okay? We've done really well with this service. We give you the 2013 results. We give you the 2014 results. We give you also something else I'm going to go over in just a minute. We give you a demo account if you were trading real money, and we show you what we do with that in just a second. Okay, so that's it. Let's see. Do we post the reason for the trade, such as breaking up from consolidation, bull flag, etc.? Ron, no, we don't. And the reason we don't is because we have a variety of different methods in which we're using, and so we may have a breakout, but it's not just the breakout that's making us excited about the trade. There might be some other things that we look at. So there's a lot of proprietary analysis. Those of you that have the ART software, you have the OWL indicator, the PTF. I'm going to be showing you some charts in just a minute where you're going to see where an indicator that we use has 75% accuracy rate. It's called the PTF. And sometimes that alone, based on the configuration of what we're seeing in terms of price on the chart, is a reason for the trade. Okay, so, you know, it's pretty good. All right, now, also, too, if you want to see how we determine this percentage, okay, you can click here, and it will take you, not to there, okay, let's see where we got that. Let's, I think that might be actually not on the client page, but on the other one. I'll get to that in just a minute because I want to show you how we determine the actual percentages. What I want to do is go back to the actual Trading Picks menu and just go through a few more things. We looked at the closed trades. I want to look at the canceled and scrub trades. Sometimes all right, we do cancel or scrub trades, all right, and when we do, we put it in here. So if you see something on the pending list that you were interested in, but you don't see it now and it wasn't filled, then it better be on the cancel trade list, and it will be, because if we move it off here, off the pending list, we put it on here. Now, why would we cancel a trade? Well, we'll cancel a trade if the market changes in that particular equity or ETF, and we no longer think it's a good candidate, okay? That's what we'll do. We'll cancel the trade and move on, okay? So that's that. All right, let's go back now. There's one more thing I want to take a look at, and bear with me here. I'm going to bring up another browser. All right, if you go to the page here, okay, this is our main page on our website, and scroll down here, okay, for terms and conditions. If you go here, you'll see the weekly top 10 trading picks terms and conditions, which is a disclaimer. Down here, we have stated returns of profit and loss. If you click here, all right, it takes you to this, and I'll put this also in the chat area so you can get it. Now, this is how we calculate the percent returns, okay? So if you have that, all right, then you'll know, if you read this, you'll basically see calculating the actual percent returns is very simple. You take the entry price, okay, and of course you have the exit price. So you subtract the exit from the entry and you'll get a figure. Then you divide that number into the entry price, multiply it by 100 for stocks and ETFs, and that will give you your percent return. Very simple way of calculating it on a point value, all right? But, you know, what you also need to take into account here, and if we go back let's go back to our closed trades page again. If you go back here, if you look at this demo account here, this is basically what we do. We created a $75,000 demo account. And here's what we're going to tell you, all right? The purpose of this demo account is to illustrate how your results might be if trading these weekly trading picks with actual dollars, not just calculating the point percentage return like we talked about earlier. So based on historical statistics, you can expect at times to have about 60 open positions. Remember that open list, how big that was? So based on the statistics of the service, you can have 60 open positions at the same time at any given point in the year, okay? So your dollars per trade in relation to your account size needs to be taken into account. So we've created this account so you can see how we do it. So if you wanted to take every trade, all right, you start out, for example, with a $75,000 account. Now, if you start out with a $75,000 account, we're recommending you basically assign $1,000 to each trade. If you get stopped out, you're going to lose $1,000 at a loss if you get stopped out at a loss. So if the trade fails and doesn't work, you're going to lose $1,000. Now, 1,000 of 75,000 is 1.25% risk, so that's your risk, okay? If you want to increase your risk a little bit to 2, then you can increase the dollar amount, all right, that you're going to basically use for each and every trade. All right, now to determine the trade size or position size for each trade, all right, you take the $1,000, okay, and you divide it by the entry price to equal, and that will give you your trade size in shares, okay? So it's pretty simple, but the nice thing about it is it takes into account your risk by the fact that you're allocating a certain dollar amount in relation to your account size, and so therefore if that dollar amount is lost, you know what the risk was based on your account size. Now, if you're dealing with a $25,000 account, then your $1,000 is going to have to be lowered. So just find out what 2% is of 25,000, and that's what you should be taking on each and every trade. Okay? So it's actually pretty simple if you do it this way. If you have $1 million and you want to do it per the trade size calculator, you can certainly do it that way as well. But for people that have a limited account size with 60 possible open trades at any time during the year, you're going to be forced to do it this way, okay? And so here we have something called the Trader's Assistant, and this is a piece of software. It's a great piece of software that we have here at traderscoach.com, but we put all the trades in from the trading picks, and each week we update this too so you can see how the actual dollar account is doing. So for example, in all the accounts, both ETFs and stocks, we have 47 wins, 35 losses, okay? And here's the deal with that, okay? 79,000, and we're up 5.9% on this, okay, dollar-wise. So we've made 4,758 cents, and we started with a $75,000 account, and now we're at 79,700, okay? Our payoff ratio is 1.15. Our win ratio is 57.32. And our percent here, okay, is 5.9, all right, when this was updated. Now, if we go to the equity curve, okay, and let me just erase these. Give me 1 second. If we go to the equity curve, okay, this is what the equity curve looks like. Started down here and has risen here. If we want to see how we're doing just on stocks, all right, we come here, all right, and we're doing a little bit better here. We got 6.38% since January 1st, 2014. Then we have the equity curve here. Okay, ETFs, we're still a little behind the 8 ball here, okay, but so they're not doing as good as the stocks so far. But you know, these things change, and our risk is kept in line here, so we're doing okay. All right, so this the main figure is if you took every trade with $1,000, this is how you'd be doing. So it's kind of a fun sheet. You can come back to it, take a look at it, and it will help you see, okay, how you're doing. All right, so I think that's a pretty cool thing to know. So that kind of covers, all right, what's in the Trading Picks secure area, okay? All right, Bob's saying you would need 80,000 plus. No, actually you need, if you got about 60 open trades, you could do it with 60,000, so 75,000 gives you a little cushion, okay? Let's go back and see what we got here. All right. Okay, so I answered, I think, how we got to the 426.47 per year. I gave you the formula, Fred, for that. The assumption is that the ART is not required to use the pick list. That's correct, Steve. You do not have to have the ART software, okay? How can anyone trade all these trades in real time and have enough stock in each name where it makes sense size to cover commissions? I just showed you. You know, on the demo account here, all right, you're up $4,700, okay? So that should, you know, we do not, the commissions are zero here. So if you're getting, you know, charged $300 a trade, then you're going to have trouble, okay? But if you're using an online broker, which you really should be using for this type of high-frequency trading, then your commissions are not going to be that big of a deal on that, okay? You're still going to be profitable. And then you can also put those in the trade size calculator. For example, if I bring it up, here's the actual trade size calculator. If you go to the worksheet and add it, all right, you can actually put the commissions in here if you own the trade size calculator, and it will actually deduct the commissions from your actual results, okay? So commissions you will want to take into account, but everybody does it a little differently, so that's that. But very good question, okay? Does this involve long and short trades? Yes, it does. We're mostly long because we're still bullish on the market overall. All right, so I think I got everybody, okay, all questions. Let's take a look at some actual trades from the list, and so you kind of can get a sense of where we're coming at on some of this. Okay, so I'm going to just start out and tell you, let me start out with PEIX, okay? This was one, all right, that we're still in here, okay? And basically what we're doing here is we're looking at quite a few things. One is we're looking at the fact of a lot of the indicators we use. We had a beautiful breakout. You see this long meandering channel? All right, this is the kind of thing we scan for. So, you know, basically people say, well, how do you find these? Well, we look for these markets that are basing, and they come in all price ranges, but because of the market cycle right now, we tend to find them on the lower cap and even mid-cap stocks. So, you know, that's where they're at now. So we're focusing on that. So this was a breakout, okay, on this one. And notice a couple things down here at the bottom. Now, you might not have these indicators at home, but you don't need them if you're going to have the Trading Picks list, because we have them. And really, we're giving you the entries and the exits, so you're all set. So we've got a wave 3, which is a very powerful Elliott wave here. All right, that's bullish. We got a bullish PTF. Now, this one indicator right here, remember I mentioned before there's an indicator that has a 75% accuracy rate? This is it. And in the markets, that's pretty darn high, okay? So when I say 75%, what I mean is when it's green like this, find the highest high in the green area, which is this price bar right up here, okay? And there's a 75% chance prices are going higher. So we want to stay in this market, all right? Now, we've drawn in some fib retracement lines here of a wave 4 correction area, all right? So here's an example where, you know, if this is still in a wave 3, it may just go and make a new high. If it's in a wave 4, it could drop in here and then make a new high. Notice our stop is going to be way down here, all right? So if you wanted to take some profits off the table, we probably would give you a notice to do that, like on this one where you could take half off. If we're just getting you in on a market that looks like this, then we'll put our stop right under here and assume we're still in wave 3, and we'll go with all the bullishness that we see down there, okay? Again, the probabilities are in alignment for higher highs, and that's what we're trying to take out of this. Ideally, you know, we want to get in down here at the bottom where these first pyramids form. These are these triangles. Again, you don't need to know what pyramids are other than it's something we use in technical analysis. All right, let's move on and take another look. All right, this next one is BOSC, and this one has pulled back and we're interested in it for a long trade. Notice we still have a green PTF on the pullback here, and so it's come down to the proper Fibonacci area. We're waiting for a green or bullish histogram on this, what we call the owl. So we want prices to get a little higher than this before going long. But this is one, once we go long, then our stop can go under the bottom here if we're put in, and we go long. We don't want to go long yet because the market has not yet really dug itself out of this retrenchment it's been in. So we don't want to go in too soon, which is why sometimes the prices are a little bit further away than where the entry is, okay? All right, so let's take a look here, okay? And they vary. Sometimes we'll have long channels like this, sometimes very short. PLUG is another one that we've been excited about, okay? And again, it's had a nice retracement. Look at this flat channel here, breakout. If you didn't get in, you have an opportunity to get in now, again, okay? Again, you want to put your stop low enough so if this wave 4 is not quite over, you still have an opportunity to stay in it. But, you know, this is exciting because, look, it's at $6.21. The indicator here says that this price bar, which has a high of 1172, okay, has a 75% probability of being exceeded. So that's almost right there, 100% return. So do you think the risk is worth the reward on this? You betcha, okay? So we don't want to miss that one, all right? Let's go on, okay? Another one, flat channel, breakout from the channel. But now what do you do? Okay, well, if you miss the entry here, okay, again, green PTF, we got a major owl histogram indicating a wave 3, so we'll probably have a very good likelihood of going higher, all right? And so, again, we don't want to miss this one either because this has a good risk to reward. It's at $5, and if it goes up to what we think it will, around 8, then that's a decent return. JCP, this is another one we've been watching for quite some time, and finally got an entry on this one, all right, recently. And so it's worth the risk to take this trade because we have had bullish divergence for so very long in this downturn. And I've been watching this for months, I mean like 6 or 7 months. And finally it turned around, showed some strength. But you know, you don't want to jump in and catch a falling knife. So, you know, just because you had this little move to the upside here, this was not an entry. Why? Because you had a red PTF, and the PTF says there's a 75% chance you're going lower than that, and it happened. All right, but now look what's happened. It's turned green, and everything is bullish now. So now we have a reason to take the trade. All right, but we got to be careful because you can get a pullback in here quite low before it goes high. So you need to put your stop pretty far back. Okay, and we've been in that one for a little bit. Okay, so next one, GLOW, glow. Let's take a look at that and see how that's doing. All right, this one's popped out again of a channel, but you can see we were interested in this because it gives you, when you have a channel like this, you have such a great way to gauge when you have a breakout and where your stops should go. All right, so you know it's breaking out. We're having higher highs. So again, this PTF right here, this indicator said we were going to break this high. It took a while, but it did it. Okay, so as soon as it broke this channel, we want to be there because this thing was still green, and with a very bullish owl, you want to go with that. Okay, it's still green, so it's not done yet. It's still going higher. So when we look at these things, this is the kind of stuff that we take into account. Let's take a look at General Motors next, okay, for a short trade and see what we're thinking on this. All right, so on this one here, we had a significant high reached. Okay, we think we had actually bearish divergence as it was making higher highs here, over here. Okay, notice the owl was less higher than it was here. Okay, all right, so there you have it. So in that case, it was prime for some selling. We got it. Notice the pyramid here. Notice the red PTF. So we're going lower. It's remained red. It's still going lower. So everything is bearish. So that's a short trade. VRSN, VeriSign, next short trade. Okay, very similar type of thing. Okay. All right. We had a red PTF. We had bearish divergence building. It broke. Okay. And now we still got a negative trade. Very bullish price bar down here. Okay, and it's starting to come up, so we may have a bottom in here, and if so, we'll need to exit soon. All right, but we'll update it on Sunday. All right, PPC. Let's take a look at that one. Only a couple more, and then we'll go back to the slides. Making a new high now, so we're getting ready. We're still long, okay, and you still want to be long, but we are starting to see some bearish divergence building between where we're at now, okay, and where it was. So we're probably in a wave 5, getting ready for a near top. We'll use our price projections that are on the list based off the Fibonacci extensions, and look probably for a scaling out situation soon because this swing, okay, has had so many price bars in a row. We'll take a little bit off the table maybe and keep the rest on until we reach the target zone. Let's take a look at HMY. This is another one we were watching. This is Harmony Gold Mining for a long time because it had been coming down with the rest of the gold market. Okay, we still got a green PTF, so 75% chance of going higher here. Nice entry. So, you know, basically this was a pullout, broke this major trend line to the downside here, broke a key level of resistance there, and so you want to be there and try to take this swing, okay? And then finally, last one just to quickly take a look at maybe is FXP. This is another one, okay, and this one's been moving up nicely as well, okay? Wave 3 here, 4 here, possible 5 bottom, so we didn't want to miss this one either. All right, so that kind of just gives you an idea. We're looking at bottoms, we're looking at retracement levels for wave 4s, basing markets, whole bunch of stuff, okay, that we look at. Let me just go back to the PowerPoint very quickly here. All right, so that kind of gives you an idea or an insight into kind of what we're looking at when we actually take a look at this. So what we wanted to do is explain all this, and then we want to also give you an opportunity to try it. And so we've reduced the price to $49.98 for a month. And so for $49.98, we've been able to keep the price cheap because we have so many subscribers. That's one of the nice things about working in volume. And so it's a great price for a great service, and we give you a lot of information on the entries and exits that you saw. We gave you some guidance on how to run the account in real dollars, depending on your actual amount of money that you can afford to risk in an account like this. But you also will be using risk control, and so basically it's a nice little package. And at $49.98, it will automatically renew. All right, so if you try it for a month and you just feel it's not for you, you can cancel the service, okay, and you won't get charged again. We don't give any refunds, okay, there's no refunds on any paid subscriptions, but you can cancel at any time, okay. So, you know, people spend $49.98 at Starbucks, so I would say if you're a trader and you're interested in this, this is a great service for you. I think it will give you a lot of setups for the week. If you don't want to take them all, you don't have to. All right, you can cherry pick them. You may be using a system, or you may be using the ART software in conjunction with it. And so with your system, you can cherry pick some of the best ones that you like as well. All right, but it will always, you will never have a week where you don't have high probability candidates using this service. And I think that's right there worth it. All right, so I want to thank everybody for attending. Let me just go back and see if I have any questions that came in during this. So let's see what we got cooking. Will this work with calls and puts instead? Yes, okay, absolutely. What I would recommend on the option scenario, if you have a long trade, you know, there's many different bullish option plays, but the simplest is to buy, especially in a service where you're, you know, taking advantage of momentum trading, or as Steve, I think, once said, swings, okay, in the market. What you want to do is you want to buy on bullish calls, bullish markets, bullish calls in the money. And the reason you want to go in the money as much as you can is you want to try to get a delta above 75%, preferably 80, 85. We have people that are using the service that use options on the expensive ones or the optionable stocks and ETFs when they can. So absolutely, I would keep it simple and do that. If you wanted to buy the stock and write a covered call with the strike price in the target zone, you could do that as well, all right, and see how you do. Keep good results and see what works best for you. There's many different both bullish and bearish option plays. You know, if you're going to take a short sale, okay, you could just buy a deep in the money put, okay, very simple. So yes, the answer is yes, you could do that. The main thing with options, all right, you know, you've got the element of time decay, but you still need to know what the underlying asset's going to do. And that's where the Trading Pick service comes into play. All right, so let's see here what else we got cooking. Okay, this is a good question. Is the weekly picks emailed to us or need to log in to find the picks? You have to log in, and we did it that way on purpose. The reason we did it that way is, you know, email can be a very interesting character, so to speak. You know, every time we send out emails, okay, sometimes people will get it, and a week later they won't get it. And it has to do with the way in which these IPs change their spam filtering guidelines. Maybe if there's a link in the email that they don't like, they'll put it in the spam folder. All right, so the problem with emailing this information is that we're afraid we're not going to get it to you. What we'd rather do is email you once, as soon as you place the order, with a link and a username. And if you don't get that, contact us so we can give it to you, and then that's all you need, okay? So every Sunday, all right, let's say Sunday, make it a ritual, obviously, every Sunday, anytime after 3 p.m. Eastern Time, you log in and get your trading picks for the upcoming week. So you'll have plenty of time to get those orders in and take a look at them and see which ones you want to take, okay? Great question. So nothing is emailed to you except the initial link with the actual username and password and access link. Okay, good. What's a good broker service? Boy, that's a good question. You know, there's a lot out there, okay? So that's a tough one to, if you're really having a hard time, maybe call our office and talk to Jean, because she has a whole list of some really good ones. But, you know, TradeStation has a brokered service. A lot of people use that. Interactive Brokers is another good one. I mean, there's a lot of them, okay? So, you may even already have a broker, okay, and so that may be good to use, and tell them that you're going to be doing more trading with an account like this, and they may even lower the commissions for you. Who knows, okay? All right, let's see what else. All right, let me see. You mentioned that we can ditto the trade automatically. Are you a lead trader at Ditto Trade Brokerage? I don't know what Ditto Trade Brokerage is. I never mentioned. Did I mention I can ditto the trade automatically? I don't really know if I said that. Not sure, okay? But no, I'm not associated with the broker. Our company is not associated with the broker, okay? So we try to stay independent of that, so you can, choose your own broker, whatever makes you feel comfortable, okay? Good question. The next one, too. Jason's asking, is the $49.98 good for as long as I'm subscribed? Yes. That's the price you're locked into. So if we raise the prices on this, you're still locked in at your subscription rate, okay, forever. Until you cancel, of course. If you cancel and then come back, you'll have to come back at the new price. All right, Diane said, okay, that sounds good. Can I save the link and sign up at home tonight? Yes, this offer is going to be good till Friday, okay? So you have till Friday, so tomorrow night will be fine. Okay, you're welcome. So you don't auto trade. We don't auto trade, Beatrice, for you. We're not a brokerage, okay? So you're going to have to set these trades up with your broker. Basically, here's how it would probably go for most of you. Not all of you, but most of you. You would, what you would do is you would get the picks on Sunday, and then the idea would be for you to take a look at which ones you want to take, and then put those orders in with your broker, all right, so you're ready to go at the open Monday morning, okay? So let me, let me just, Gene might have put this link up here, but let me just make sure this link is up here. This would obviously help if you had this one. And this is the link for the special pricing, okay? So it would be a good idea if we put that up before we end the webinar. Okay, so I've just put that link up in the chat area. So you can check that out, bookmark that page, and just come back by Friday. This page will be removed on Saturday, okay? So that's how we work that. All right, let's see. Indicator package, I mean. Okay, Sharon, let's see. So ask me again, Sharon, on what you mean by that. All right. What percentage trades were profitable? Well, let's go back to the that account we were looking at earlier, okay, and see if we can take a look and see. All right. So we go back here, all right, and go to the 2014 returns. Okay, we come down here. We have 59% of the trades are profitable. Let me just go back up. 59% of the trades are profitable. So if you look at this heading here, this is pretty it. And this is pretty good because that's out of 40, that's out of 80 trades. So it's usually we range in this range. If you're 60% profitable, that means you're winning 6 out of 10 trades. That's not too bad, okay? Okay, would all of us buy the same stock? Would it affect the price? Of course, not sure your customer size. Well, I don't think we have a customer size quite that big enough, okay? You would have to have, okay, a huge customer base. I'm not sure anybody has that big a customer base. Maybe about the only person I can think that could move a market, maybe Buffett if he says something. But the markets are just too big, okay, for the most part. Now, with that said, on some of these smaller cap stocks, if you have low liquidity, maybe a little bit, that's possible, but for most sake, no. All right, Jason, if the price moves away from the entry, do we skip the trade or keep working the order? All right, so Jason, give me an example. Let's just say, all right, I think I know what you mean. So let me tell you, let me just say this and you tell me if it's right or not. So what Jason is saying is, let's say we had an entry at $10, okay? And I got to tell you, if it gapped open, all right, at $11 or $12, all our results that I do for the actual results of this service are based on a gap opening entry, because I got to assume the worst case scenario when I'm doing results for this. So if I get a $2 or a 20% gap open, guess what? That's what's going on the open list that I entered at $12 instead of $10. So if you put your orders in before the market opens, that is a risk you stand. But you can also see we still do very well, okay, even when taking that worst case scenario. So you may want to wait and see how the market opens and settles down, or put a limit order in, okay? But what we do is assume the worst and put an open market order in before the open, and if you get a fill on a gap, we take that and use that for the results. It's just the way I want to present it. I don't want to present it in the best case light. I want to present it actually in a realistic case light, okay? But that's a great question. So again, the only thing you got to be careful with that is if that, it may not come back down as well. There's some gaps that we've been filled in that it's actually worked in our advantage. So, and most of the gap fills on some of these aren't that dramatic because they're not day trades, okay? You're going to be in this for a little while. So if it's a move that we really expect to move and you get a fill that's 50 cents off the mark, that's not going to kill you, okay? But a great question. All right, Fred, please answer my earlier question about what the value of a 50,000 account would be today if I started January 1st and did all the recommendations. I'd have to do the math, Fred. What I would do is, what you can do actually is access all these trades and actually, if do the math yourself if you want, or let's see where we go. Yeah, here's where I want to go. So if you did this, go to the demo account, okay, then, instead of 75,000, just use 50,000, okay, and then take the figures that we have in the closed trades area, and then you can figure it out, okay? I'd have to do the math on it, okay? Can you show a sample trade recommendation? Sure. In fact, this is what I was showing earlier, so you may have come in late, but for example, if we go back, let me find the actual area where the Trading Pick service is. So here is the main menu, okay? This is what you're going to see when you log into the service, okay? And you should see a pending trades area, okay? And here are the trade recommendations right there. And this is real. This is exactly what we have live in the system now, all right? So here they all are. FTEK, we have PEIX, here's your entry, here's your stop, here's your target zone. It's very simple, okay? Symbol, buy or short, ideal entry, initial stop when filled, price target zone, okay? And then once this is filled, all right, then it goes into the open list, which is right here, okay? And then we keep track of it, and what we do is we adjust the stops, okay, and even put in some profit taking sell recommendations like scaling out and so forth, okay? Beatrice, we appreciate your integrity. Well, thank you, because that's important. I mean, we don't win every trade. We're trying to run a realistic, good quality service here, and give you the results up front, and it's real. How do we know if there's an adjustment? What we do is every week, every Sunday, all right, by 3 p.m. Eastern time, we go in, okay, and we publish. What we do is I work over the weekend, and I go through all the trades, and then if I need to update a stop, okay, I'll do so. For example, look at this. See this one here? We updated the stop on 316. Okay, the stop was 20.29, so we leave the initial stop in so you can see what it was, all right? But then this is the update. This is the current actual stop loss. This is the updated one right here, okay? We give you the update price. So you need to check, if you're in a position, you need to check the open list every week to see if we've updated the stop or even maybe suggested, like we did down here, a sellout. Okay, sometimes we post this. This was updated and posted for the first time on the 16th. Okay. All right. Well, we're coming up. We've come a little actually over. Okay, and I know people get tired, so I don't want to go on too much longer. But what a super bunch of questions. Okay, how do we use the buy? Thaddeus, hi Thaddeus. Hi Bennett. Who do we use to buy the securities? Well, you're going to need to have find a broker independently. That'll probably be on your own. If you need help, Thaddeus, give Jean a call, okay, and our office a call, and she can help you decide on what broker may be best for you. I know TradeStation is a brokerage as well as a charting platform, but you have, many others, interactive brokers. There's just a ton of them out there. So pick one that you feel that you could work with is probably the best answer, but you will need a broker. These are not, basically what we don't auto trade these for you. So the whole, broker situation we leave up to the individual. So you take this information and then, of course, you have it to enter this information into your online broker or however you do it with your broker. Okay, hopefully that was good. All right, Paul, good. Glad you liked that. I hope it clears it up because so many people have a lot of questions on this even after they subscribe. So I think, if you're a current subscriber, this is also going to help you learn how to use it better. Okay, what platform do you use in your chart screen? I use a variety of different platforms, TradeStation, eSignal, Ninja, okay. I'll toggle back and forth to those. They're all good, okay. Okay, so here's a question. If price hits the stop but comes back up, what do we do? Do you recommend re-entry or not? It depends, okay. I actually had 3 picks I got stopped out of that I reissued entries again on for this week. So if the pattern, the answer to this is if the pattern is still good and I got stopped out because I happen to have the stop too close, all right, then I might want to go back in if I still feel there's really good opportunity. In other words, if the risk to reward is high, okay? And sometimes it is. Sometimes, let's face it, sometimes we get stopped out on trades because we have to have risk control, but we get stopped out because we get stopped out. And then we reassess it. If it's still a good trade, I look for another possible good entry point to take, and I'll get back in it. Okay, so it's a possibility, okay? That's a good question. Boy, great questions. All right, well, gee, I could go on and on. This is just super, okay? ETFs, yep, we look at ETFs sometimes. If the market's going to the short side, we'll pick some short ETFs. Those are nice too, and I think you can actually buy those perhaps in your IRA. You'd have to check. Yeah, Glenn, you can see performance for the last, since the inception, actually. If you go down to historical returns here, okay, and go down to annual and quarterly returns, glad you asked this. These give you the results, total. Now, what we do is we update this quarterly. So the next time we're going to update this will be March 31st of this year. And you see we say that right up here, okay. So it was last updated at the end of the year. So every quarter we update this sheet. Next update is here, okay. But here is the entire running total, okay, and here it is broken down by quarters, okay. And so then you can analyze each quarter, and actually you can look at every single trade, okay. And here's the quarters here, okay. So the key is to take that link I gave you on performance and I'll put that back up. And from there, you can access all the performance results. All right. Now, let me just put up one more time as well this link. All right, so you can bookmark this link, and it's on the order form, and you can come back by Friday as well. All right, super. Okay, well, I think we better end here. Again,
Ben, that was a great presentation.
Oh, okay, thank you, Jean. I just want to thank everybody for coming, and I want to thank the great questions because they were just super, okay? So I really appreciate that. Jean, I'm going to turn it over to you. Again, we recorded this session, so we'll have the recording posted in the archive section tomorrow, so you can check that out again. All right, Jean, I'm going to turn it over to you. Thank you, everybody, for attending, okay? Thanks very much.
Excellent presentation, Ben. That was really great to be able to see exactly how you produce the top 10 and how you can use it and how everyone can implement it. And great audience. You guys had super questions, and everybody's chatting in. Nice to see you, BH. And Steve and everybody. Next week we've got Dave Osmond from Metastock for Wednesday Night Live. So he'll be showing us some Metastock information. And of course, on the top 10 offer, you can call me or email me anytime. You can also click on the link, of course, if you need to. But let me know if you have any questions, and thanks again for being here. Have a great night.